Finance can be messy, but don't worry. We clean it up with facts, fun, and maybe a little sarcasm. Welcome to the Financial Sandbox. Let's get into it. Today, my guest is Jeremy, aka Remy Francioli from Baker Tilly. What's up, man? How are things?
No complaints at all. How are you, Herb?
Awesome. Life is great. It's a beautiful day here in Northern California, and you're back, right? Aren't you back in our beautiful state?
I am back. I missed the high taxation, so I said, I need to contribute. So I did a world tour, went to Colorado, went to Florida, and came back. And I got to say, there's nothing like California. So
So tell me about Baker Tilly and tell me about a little about their history and a little about you and why Baker Tilly.
yeah, absolutely. So Baker Tilly is a firm. Just the history. It started in Madison, Wisconsin, in 1931.
Wow.
Almost 100
Old
years
school.
old here as an organization. Our DNA, our background is in the accounting side of the business. That's kind of where we have played for the majority of our history. I would say accounting and auditing. And we have grown in the last few years where our consulting side of the business is now perhaps one of the largest, actually is the largest source of revenue for the firm, and includes a number of different segments. However, the largest segment within the consulting side of our business is real estate. So the revenues in general are about 30% tax, 30% auditing, and 40% consulting. In the US, we're about $2 billion in revenues, a little short of, I think, about 7,500 employees. Globally, we are over 44,000 employees and about a little shy of $6 billion in revenues. So, the firm has quite a bit of expertise in the real estate side. It has quite a bit of expertise, obviously, on the taxation side, which we'll shortly here talk about why we're doing tax-related strategies. It's a good marriage for us in terms of solutions. And by the way, you may see more in the news as it relates to, for those that follow Wall Street Journal or others, there have been a few articles about acquisitions that we have made as a company on the accounting side, as well as the auditing side. We have made a stated goal to go from 10th largest accounting firm in U.S. to kind of dominate that middle market presence and become the fifth, sixth largest. And that normally comes through acquisitions. So you may hear of more partnerships or mergers/acquisitions where the Baker Tilly name most likely will stay, but we'll continue to grow from a top line standpoint. So that's a little bit on Baker Tilly. Just briefly on me, I was an exchange student from Brazil in 1994 in Wisconsin. So if you hear an accent,
Oh, wow.
had never seen snow before. I certainly saw more cows in Wisconsin than people for a while. And I was a swimmer. Ended up swimming in a Division III school, stayed for college, grad school. Started my career in 2000 with a mutual fund company, and in '04 joined a private equity firm in real estate and have stayed in real estate for the last 20, 21 years. So yeah, that's a little bit of background on me.
Well, in the circles that you and I run in, I think you know Erica Blue over at Trilogy, and
Yeah.
at Trilogy, also located in the Midwest, and she's a water polo player. Didn't know
Oh, cool.
didn't
I
know
did
if
not
you
know
knew
that
that.
about her.
Yeah, so next time you see her, you'll have to talk to her about that. So
Yeah.
yeah, she was a great interview recently. So Baker Tilly, I really didn't know the largesse of the company. It's
Yeah.
it's much it's much more than the sponsors that I work with on a regular basis. They're smaller, they're mostly domestic, especially in the space that I work in and doing a lot of 1031 exchange, like kind exchanges for clients who are looking at options and the possible Delaware statutory trust option. You guys are much bigger, much broader than I expected. I didn't know all that.
Yeah, and I think most people don't. I would say, unless if you known the accounting side of the firm for a while and you tracked, and perhaps that's been part of your business, people may have a sense of the size. But it is a very large organization. It's getting bigger. We have received funding from some private equity firms, actually out of the Bay Area where you're at, Hellman and Freeman, to fund some of our growth. So on the accounting and as well as the tax and the consulting side. So we're going to continue to grow, and we're not going to shoot for top two, three, four. We want to stay within that middle market, but
Right.
we have expertise. Um, you know, Further dialogue that you and I need to have. We just had a lady, which I'm tracking down within our firm, that is an expert in 1033 exchanges because of all the fires in California. So
Oh
she
yeah.
is an expert on that space. So I'm like, well, I didn't even know we had somebody within our own firm that is an expert on that. And she was actually a speaker at a trade conference. So there are so many resources that we have from I believe just the consulting side of the business, we're over 400 real estate professionals that are dedicated to real estate. And when then you look at the tax side, the auditing side, and what a lot of people don't know, we're the second largest consulting firm for the real estate construction industry,
Mhm. Mhm.
which gives us a lot of insight and know-how on places to go, places that could be oversupplied. We're probably well over 1,000 real estate professionals that are dedicated to the industry. So when you look from that aspect, from a revenue standpoint, we're probably the second largest sponsor within the entire industry. So
Wow.
yeah,
Wow.
probably JLL is the only one that has higher revenues and people than we do.
Sure. You mentioned the 1033. There's also a 1031 exchange and a 1033 exchange. Those are really different. And I don't want to go down the rabbit hole on that. But in California, when it comes to high speed rail, there's a 1033 exchange, which is some exchanges I wound up in a couple of years ago with
Mm-hmm.
people who wind up losing property through the construction of the high speed rail project. And so it will be interesting to see what happens down the road with what we've experienced with fires here in California. And I'll pop in a little slide here at the end on the difference between a 1031 and 1033 exchange at the end, so people can see what the difference is. Not certain if you want to give 20 seconds on it. Difference.
Yeah, sure. So, obviously the 1031 exchange, you're selling investment property, right? That has been used for investment or business purpose. You're technically deferring capital gains as long as you're investing into another property that is for investment or business trade use. We won't get into the details of the like kind and the
Yeah.
timing, all of that, but that is normally the purpose, is what most people are going to be really considering if you own a rental of some sort, if you own land. That is the most common scenario. Would be a 1031 exchange, and it has its own set of requirements. A 1033 would be similar to what you just explained, right? If you have a freeway or a railroad that is eventually coming, hopefully, right? Who
Eventually,
knows?
hopefully, who knows?
Yeah, we don't know where it's going to go, but it's coming. So, right, and the government needs to access your property. So you may have an ability to an exchange. You set a whole follow a entire different set of rules, a lot more time, different requirements, but it would allow you to potentially defer some of those gains. And you know, obviously, working with somebody like Herb, you'd be able to work through all those details.
Yeah, it's a whole different set of rules on that space.
Yeah.
So Baker Tilly, you guys are in not only consulting but real estate, and one of the ways that I know Baker Tilly is working with 1031 clients who are looking to get out of sort of active property management and get into kind of uh, a more consistent, steady Eddie income without the toilets, tenants, and trash. Uh,
Correct.
how did you guys get into that space?
Yeah, good question. So I would say, as a sponsor of Delaware Statutory Trusts, of DSTs, we are fairly new. We've been in the real estate space we've owned our own broker dealer. We've been doing transactions and selling, real estate for 20 plus years. However, we saw an opportunity, as many have, kind of post COVID. We had an opportunity to consult in the actual opportunity zone strategy. It was not our own, but we consulted for it, and we were, as a firm, evaluating the DST 1031 side of the business. And it just, given the background I just shared with the firm, having you know over 1,000 associates that know from cost segregation, tax auditing to consulting in real estate, and obviously having an entire side of the firm that is just taxation. We have I would say, a lot of comfort on the tax side from what the IRS is giving us guidelines and how to structure these offerings, as well as the real estate side. So it felt like a natural progression. We believe that there is a trend, a mega trend towards passive ownership of real estate because of obviously age of the population that owns it, from state planning standpoint, from family dynamics of kids now wanting to have their hands on, or a spouse.
Yeah.
So we right. I mean, if you own quite a bit of real estate and your spouse has no interest in that and you pass, it's probably not necessarily an easy thing for that person. So we saw all those trends, and we felt like we could bring some expertise into the space. I don't think there is one sponsor within our industry today that has the taxation, auditing, and real estate expertise in house, right?
Right.
So we
Right.
felt like we were unique from that aspect, and that's why we came into the space.
Some of the firms stick to different space. There's some firms that do all multifamily. Some firms are in necessity retail, self storage. Is there an area that Baker Tilly has cornered as where you guys have placed and created your offerings in the Delaware statutory trust space?
For now, yes. So I'll answer that question two ways, and not to say anything negative about multifamily, because we will do multifamily offerings and we like them and we think it makes sense.
Oh yeah.
Those are the two sectors. I would say multifamily and student housing are the two sectors today. Call it living. You may have senior housing there as well, but we're not entering the senior housing space. So as we were entering, to give some background of why we are in student housing, so we've done a few offerings in student housing. We have more of them coming. We actually have a current one at University of Missouri that is just about fully subscribed. Took us about 8 to 10 weeks to launch the offering, raise the capital. So why do we like student housing? Why have we been in that space? And then
Yeah.
kind of why we're now starting to look at multifamily. So it goes back to post-pandemic and the 21-22 timeframe when we launched our first offering. As I mentioned, we're new as a sponsor. This is our fourth offering. All of our offerings have performed. All of our prior offerings, by the way, have paid a bonus distribution. And there's a few other things that we have done that are different that we think it protects investors, advisors, and broker dealers. But we looked at the marketplace, and here's what, in our opinion, in our eyes, is what we saw. We saw a fairly competitive marketplace. Everybody was going into multifamily. If you remember, it was a time that there was very cheap financing. So we also saw significant construction start, right? There's a lot of new supply that was not yet in the market,
Right.
but it was coming 2 to 3 years down the line. All the multifamily players were able to raise rents significantly, but we felt like in 2 to 3 years you're going to see not a correction but a pause while that new inventory was going to be brought to market. So we saw high competition, eventually new supply in the marketplace. And normally the spreads between multifamily and student housing, they range between 50 to 75 basis points, 0.5% to 0.75%. And post-pandemic, the valuation in student housing got hit much harder because of some schools obviously had significant issues, some didn't. But we saw an opportunity to capitalize in that space. Better valuations, fewer competition, not as much inventory. So we went into the student housing sector. It has so far been a great strategy for us. What we also do that's a little different perhaps than others is that we have a vast network of clients. So we don't shop normally outside and just hire a broker and go compete with, JLL or Ares or Inland or somebody that has perhaps more capital than we do. We look internally and say, well, who do we currently work with and have a relationship that we could approach and perhaps have a relationship with them where we're acquiring their assets, call it off market, or at a minimum have some have the first dibs on making an offer on what makes sense to us. So we actually have 3 firms that we have technically now approval for two. They were auditing clients of ours, so you have to be careful in violating that relationship because you're not allowed to have any other relationship if you are an auditor. So you have to drop that relationship, which we have, and then it gives us authority to engage some of those prior clients, which is great because you've been auditing them for 5 to 7 years. You know how they lose money. You know how they make money. Everything is
How
like,
they
hey,
make money and lose money.
yeah, I mean, not right. Nothing
Right.
is a linear path. So you know how these people
Right.
are making mistakes,
Yeah.
but it's great insight to say, hey, I was the auditor in your books for 7 years. And now we're going to partner in the real estate that I audited, and not to say that we get better pricing for that, but we certainly get some good insight. So, long answer to your question, but to give you why we're in that space, and we think the student housing sector still has some legs. We're not seeing the properties and locations that we're pursuing. We try to stay within, stable enrollment. Right, we don't
Mhm,
want to see
mhm.
obviously enrollment going down. It doesn't have to be gangbusters, but it needs to be stable. We like schools that have some kind of athletic component to them because it attracts students from an experience standpoint. University of Missouri, as an example, is just putting in $250 million in their new stadium. It's
Wow.
going to look better than most professionals. So things like that are attractive to us. But then we look at what are the permits, right? If you have a permit property and financing is going through and they're starting, you can count in new supply 18 to 24, maybe 30 months down the line. So we like to know that if that's not coming, you'll have 12 to 18, maybe 30 months where you can continue to push rents without significant pressure. So,
So much packed in there.
yep.
I'm gonna back up and answer a couple of questions. Uh, First of all, we use the term broker dealer.
Yeah.
Answer when someone says, "What's a broker dealer?" Break it down really quick. What's a broker dealer?
Yeah, so for us to interact, so for Baker Tilly to interact with you, Herb, one, you need to have a relationship with a broker dealer where you're processing your investments through. So we set an agreement with our firm, with your broker dealer. Obviously, your broker dealer has the duty, the responsibility to review every single program before it ever touches your hands or your investors' hands. Which, just to give even a little bit more insight to investors, before we ever buy a property, right? We have normally a lender that does the underwriting to provide us with the financing. We have a lawyer that structure our offering. We then hire another lawyer to review the lawyer's work. It is a scam, I tell you. That's a great business, man. But
Fees.
it's like good lawyer hires another good lawyer to make sure that they're, but it's important for investors because you don't want
Sure.
to go into a strategy that it's telling you that you're replacing your property through fractional ownership, and then if the rules and guidelines have not been followed and you have a technical violation on the structure, you're going to lose your taxable benefits. So we're going a different direction, but that is the involvement of the broker dealer. Concord does which is the group you're affiliated with, does a phenomenal job. They're very tough on the underwriting. They focus
Yep.
on, call it, experience and good sponsors. So
Always has been. Yeah. So now I want to talk about we're talking about multifamily and student housing. What's the difference? Where when you there are these great high end multifamily complexes that are happening all over the country, and a lot of the tenants are empty nesters and millennials, right? Because they want a no frills, no problem housing, right? But they also want all the amenities. So, but
yep.
that's the same with university housing. What's the big difference between multifamily and student housing, and why have they been both actually a very good pool, a resource in housing right now?
Yeah, I would say the biggest difference from a, call it, a risk standpoint, obviously both are providing housing, right? Different segments, which, by the way, there is always a component of our housing that is non-student because you can't discriminate from a student. They have to qualify, obviously, from an income standpoint of their own. It's not a huge component, but it is some. Our properties are all off campus, just to kind of clarify exactly what we do. They're highly amenitized. It's these kids are going to have a hard time come graduation because it's golf simulator, tanning beds, jacuzzi, pool, indoor facilities for a workout, basket, you name it, good rooms, right?
It's
All for
amazing.
it's
Yeah.
a different experience. I went to a technically the equivalent of a prison, right? When I was in school, it was a brick walls, like nothing on it, shared bathrooms in one hall, right? Uh, our timing was different, but at
Yeah.
least we didn't have cell phones and technology tracking us, and that's a good trade off. But
Right.
so on the student housing versus multifamily, also, by the way, our leases are grantor leases. So what that means for you parents, investors that are looking at this, if your kid puts a hole in the wall and we have to fix it, which our turn is on average 24 hours for all of our properties, you're going to get a bill for that hole, for that issue that was caused. If you try to fix on your own, our team will find out, right? And they will try to charge parents. It's a lot of times people think that college housing is going to be completely trash. Well, this is not a fret house that you have. This is people tend to take better care of some of these properties, especially if the overall market that you're in is fairly fully leased. You're not going to have as many good options,
Sure.
especially if the amenities are fairly high. The key difference in all of this that I just explained is that the student housing cycle of leasing, your lease up ability, is limited compared to multifamily. That's really the risk in student housing, which is why a lot of times folks that are multifamily don't cross over to student housing. You really need to know how to operate and properly pre-lease your properties. Academic years technically for most leases start August 1st. You typically have a free month of August in case if you were to have somebody coming in late, but the vast majority of your leases are going to come by, call it June. Uh, I would say latest by 4th of July. So you do want to make sure you're pre-leasing well, your team is aggressive, and get those renewals. Renewals are very important to a student housing operator because there's not a lot of turn, there's not a lot of fixing. The same person that's in there staying in the property, your costs are lower because you don't have to go out and market to somebody else.
Right.
But you have to, compared to a multifamily where you're going to either gain or lose a tenant every month. In multifamily, you never really end your lease up, right? You're always filling up a pipeline. In student housing, in October is going to be pretty hard for you to move somebody in. So that's to me the biggest difference, the biggest risk.
I think that's a really good point that you make, and it's like worth repeating in the student housing space that that lease is it's together often by like mid June or July, right? For August move in, and and that's steady Eddie income from mom and dad
Mm-hmm. Yep.
through June.
Yeah. Yeah. I mean, our leases are 12-month leases. So, if you want to stay there in the summer, obviously you're going to be paying for it. All of our properties, and a lot of them have converted if they weren't pre-COVID, but all of them are 1-to-1 bed to bath ratio, even if you are in a 2, 3, 4 bedroom. Certainly the one bedrooms are more popular. What we see with most schools is freshmen and sophomores like 3 and 4 bedrooms, and then they start to date not like their roommates, and they start to shrink the size of their like, hey, I want to move in with a girlfriend, or I don't get along with 3 out of 4 of my friends anymore because we're different.
Right,
It's just college, right?
right,
So they
right.
start big and they start to shrink the size of their
The
who they
space.
want to room with.
Oh, it's great. That's great. It's got to be great to watch that too. So and to
Yeah.
be in that space where you there's a certain level of energy and enthusiasm that when you're around that it keeps you up as well.
Yeah. Oh, no doubt. It's fun to see. We have we were part of both the turn as well as some of the inventory counts for our last property. It's crazy, when you have to turn 300 beds in 20 days or 15 days to make sure everything is ready for new tenants. And most of our properties, by the way, have some kind of relationship with athletics within the school, either being a volleyball, basketball, football team. They're all different, but we try to, you know, always have that 20, 30, 50 leases that are not guaranteed, but we know are coming from the school. So,
So it's complicated. You must have quite a team a leasing team? Is your team on site there? And how much of it is remote? And how much are the buildings smart buildings? So two
Yeah.
questions there.
Yeah, I would say all the teams are 100% on the property, all of them. None of them are students. So I think there's sometimes in the non-professional uh, teams, and by the way, we hire and partner the entity that sold us the the Tailwind Group for at least these properties. We have Blue Vista and others that are just as large or larger. They have teams on site. I mean, these are not part-time employees. They're year-round, both on the maintenance side as well as the leasing side and the manager of the property. So you want to make sure you have just great management, especially with any issues. If a toilet's not working or something's not working, that's part of the experience of having somebody at the property that is right responsible for 600, 700, 1,000 units. You're going to have issues constantly.
Yeah.
So from that perspective, our teams are one hired people, professionals. They're not students, so that helps us with our maintaining our occupancy and then pushing rents as well. That's obviously very important. You want to grow the NOI of the property as much as you can, as technically as fast as you can, because your price is set after you buy the property. Really, your only controllable is your expenses and your top line revenue. So you got to work on both. And then from a technology standpoint, I mean everything from smart door locks to thermostats to everything today has some level of technology within these properties. So
So you've used the term pushing rents.
yeah,
Let's tell our audience what's that mean, pushing rents. You guys start out with a certain rent roll. As it is, if you're buying a new property, is it already partially leased up, or do you get it empty? And
no, good question. So just given the nature of a Delaware statutory trust and the limitations that are in place given the structure by the IRS in terms of you can have some capex, some capital that you're going to spend on a property, some light renovations, some things that have been already planned. Normally, you cannot infuse additional capital, so you're looking into buying a property that's stabilized. Call it 85 at the bare bones. I don't think we even go 85%. I would say anything under 90%, we probably would not acquire. We would actually prefer 100% lease for the last at least 2 consecutive years, showing that it has a consistency of hitting fully occupied. And now, ideally, that property is still at or below market rents, where it tells us even though it's fully leased today and it has been, you still have the ability to push rents, which is what we have done so far. Once again, when you look at the market, that you're not going to have another 1,000 units come down the street where they're going to have concessions and free rent and free iPads and whatever it is, and pressure rents across
right,
the market.
right.
It tells you if the market is leasing at X rate and the school is stable and growing, you're most likely going to be fully leased for your assets. So that's what we focus on. And then we have a goal, as well as the property managers have their goals of, if I want to sustain and increase my distributions to investors and be able to sell this property in 5 to 6 years, you need to be able to grow top line, just your net operating income. Even if the current cap rate, the current multiple that the properties are trading in the market today don't change much, really the only thing you can change is your are you controlling your expenses? And we can talk about this, by the way, as well, because we're probably the only firm in the marketplace that covers variable expenses above pro forma on the company side. So if I get an insurance bill that I had projected $100,000 cost, and the cost is $125,000, Baker Tilly as the master tenant writes that check for $25,000. $100,000 comes from the trust as planned. The difference comes from us. In a normal structure, that extra expense would have come from the trust, which reduces cash available from distribution, which doesn't necessarily will, it may impact the distribution that investors receive. So
Wow.
post
Okay.
acquisition,
So hold on.
yeah,
We're gonna lose our audience with all
it's a
these.
lot. That was a lot.
So
Sorry,
basically,
man.
if I had to break that down, what you're really saying is if there's an expense that's an insurance cost and your cost on that is capped at 100,000, but the cost is 125 out of Baker Tilly's wallet, they're writing a check for that $25,000 extra. It's not coming out of the income that's coming from the rentals. It's really out of the company's pocket. So you guys really have to manage that property well to mitigate that kind of a situation.
100%. So it comes out of the master tenant, which is an entire different call and dialogue, but it's there's three expenses, right? The fixed expenses are fixed, so you can properly manage those. The three curveballs that most sponsors have, including us, is insurance, taxes, and utilities. So we're actually renegotiating insurance right now for all of our properties. So you know this because I know you're insurance licensed. So it's expensive, and it's we have to constantly be shopping for things and being creative in terms of not reducing coverage, but providing proper coverage. But it is a risk that we take as a sponsor, right? So it's kind of backing into performance in some ways because our acquisitions team and our analyst team, because we're not a professional syndicator, right? This is not how we make our living. If we,
Right. You got a very diverse business.
yeah, I mean,
Yeah.
we're currently we're starting. Our exposure to DST started when we had over $5 billion in revenues, right? We want to grow this. We see the opportunity in the trends over multiple decades, but it's not. We can take a pause, right? I mean,
Sure.
so the firm has made commitments by saying, well, how can our underwriting team properly underwrite a property from an expense growth, a revenue growth, pricing, and everything. So we really think about this asset throughout the lifetime and how it's going to perform over the life of the offering, not just I need to get an offering out to raise money.
Right.
I think that has been, I've worked with different sponsors in my career over 20 years. And I think that's one core difference that's hard to put a value to it. But when our team is looking at it, and a lot of times their compensation is attached to that. Hey, you underwrote a property 3 years ago, and that's having a lot of problems. Uh, your bonus may not be as high as you were expecting. So,
Right.
that's kind of part of our baking the cake.
Yeah.
So,
Yeah.
sorry, man. We can talk about like for 3 hours. That's why I was
Oh, I
like,
know. And it's great because I love this. I've had sponsors who I wind up quizzing after getting a new offering, and I've had sponsors say to me, "You guys don't usually ask these questions."
well, that's true. You
And
and
I
I
always have to
just
say, well, a client is going to ask me this question,
yeah.
so I'm going to need to know the answer. So,
Well, you're a real estate expert, man. That's why it's different.
so, I've got to ask those questions. So, uh, I'm going to turn to the fun of this interview, right?
All
Because
right.
you and I could get into these weeds and really sort of hack through them. I'm hoping that my audience here has really stayed with us because sometimes the
So,
details that people don't look into when they're getting into an investment is why they get into trouble because they have not taken the time to really get into the details and to talk it through or to listen to the whole interview, right? So I encourage folks to really listen to what Remy is saying here because these are the details. All right, so how long did you live in Brazil?
I left Brazil, technically call it 17 years, first
Oh,
17.
okay. Okay.
Yeah.
All right. So I'm always asking questions today. I think today it's going to be sports for you because you probably didn't spend enough time in the US for cartoons and comic books.
Sorry. Yeah.
My family's from Central America. I grew up with baseball,
That's
right? So my question to you, I'm assuming soccer,
yeah.
football, the
Yeah.
beautiful
Well,
sport,
that's right.
right? Did you play as a kid?
I tried.
You tried.
I was that kid that I ended up being a swimmer. So I was that kid that was like, all right, the team is set. You get Jeremy, right? So like, hey, I was the last kid. It was like,
Oh, the last pick.
yeah, they're like, oh man, we have him. So unfortunately, as I tell my kids, I say, hey, I love playing soccer. I dream to be a soccer player. It's probably every Brazilian kid. But man, that was horrible. So I ended up being, got to know your strengths. Not it for me. Thankfully, my family identified it soon enough and put me something else.
And they threw you in the pool.
And they're like, "Oh, this is longer practices. We got perfect. Take
Great.
the kid." Yeah.
Do
So
you still follow soccer and football, the beautiful sport? Do you have a team?
I have. I've always followed. I don't follow as much European soccer. I follow more of the Brazilian soccer. Back in Brazil, Corinthians is kind of the team that I grew up kind of following and cheering for it. It's still not as much as I have in the past. I now have kids, that are somewhat into soccer, but into other sports too. So time is just difficult. But I follow Corinthians, which is a Brazilian team out of São Paulo.
Uh-huh.
That's kind of I followed since I was a child. So
Nice. Yeah. My family being from Honduras and Nicaragua, so we never make it past like, first round and then we're out. Right. So
yeah, I hear you.
I've spent a lot of time in Europe, so I do follow the Spanish teams on occasion. So what do you do now? You've been kicked off the soccer team and thrown into the pool. You still swimming?
I do actually. Yeah, I was in the pool, so I swam as long as I'm not traveling, either at a conference or seeing clients. I try to stay somewhat fit. In our profession, we're constantly entertaining, as you know, and having fun. So I swim if I'm in town 3 to 4 times a week. I swam this morning. I'm an
That's
early
great.
riser, so 5 o'clock in the morning, I'm in the pool. So I'm up
Wow.
at 4,
Great.
4:15. And there's a Masters team. I'm actually racing this Sunday, my friend. So
Are
there's
you?
a local race. Nothing is all for fun, raising some money
Yeah.
for some charity, and
That's
we're gonna
great.
get a bunch of old guys together and gals and swim around. So
Great. That's great. That's great.
yeah.
Well, that's awesome. Well, folks, that's a wrap. Don't forget to like, subscribe, and stay tuned for more raw, real financial talk in the sandbox. Remy, thanks so much for joining me today. It's been a pleasure to have you. It's been really, oh, you know what? I forgot. There's one more thing. You wrote a book
Yeah.
on Social Security.
Oh, yes, I did.
I
I'm
see
sorry
a
you brought it up.
Brazilian kid comes to the United States.
Oh,
And I don't even think that Brazil doesn't have Social Security, but you wrote this book here.
yeah. We,
Uh,
we may have
we
some
need to
Brazilians
get
collecting
like
Social Security, man. You never know
sell
now. I
50,
mean, with
maybe
all
we'll
this.
sell 50 copies on Amazon here, right?
Yeah, hey, I have all my family has purchased a copy. So just a little bit of background on that. I had a stint working in kind of your side of the table,
Yeah.
providing some services as wealth management, and I constantly had people talk about Social Security. Seems like Social Security was a small, not necessarily a small component of people's retirements, because for some people it's a key component, the only
Yeah.
component. But
Yeah.
regardless of where you were, there was so much confusion. That's kind of the message that I took, and I had read significantly amount of information on Social Security, and I always take good notes. And I realized that my notes are like, you need to be reading my notes so you don't ask me these questions. So, so I just put them together in a book. You're welcome to go read. Some of the data in there has not been updated since I think 22 or 23 when I last updated, but it gives you some general context on how things are calculated, and it answers probably the most common questions. If you have questions that are not answered, you always should be
Don't call
sitting
you.
with Herb and the equivalent to have a good strategy on when to collect and how to minimize taxes and things like that. So
Well,
so
I'm
yeah,
going to pick up a copy on Amazon. So
thanks, man.
I'm going
Only if you put a 5-star review, because I only have like 5 reviews. It's
Hey,
good content. There's been a few advisors within Concord that I have answered questions for and done. So I was like, hey, here's how this would work, or go look at this. So anyway,
all right. We're going to call that your gig job.
there you go. Thank you. That's not how I pay my bills, but it's a fun topic. So
It
for
is.
me, so sorry.
Well, thanks so much for joining me today. It's been great having you on the show, and I look forward to seeing you in person in a couple of months. I know. So,
Yeah,
all
I
right.
know. I'll see you in Arizona. So
Yeah, absolutely. All right.